You're listening to Let's Figure It Out by Ad Valorem, where we break down business, finance, and tax without the fluff.
From side hustles to audits, we keep it practical, insightful, and even a little bit of fun.
Let's get into it. Welcome back to another episode of Let's Figure It Out, an Ad Valorem podcast aimed at helping small businesses understand their numbers. In this episode, we're covering off a topic very close to our hearts, the old side hustle.
Yeah. So I think it's become quite prevalent that a lot of people are looking at additional streams and avenues of income. Today we want to cover off, when does that actually become taxable? So I know a few people who delve into social media influencing or are doing tutoring, dog breeding, all of which fall under the side hustle bracket. So today we have our guest, Regan Saffhill, who is a tax manager at Ad Valorem, to give us insight into the tax.
Yeah, I think it's not necessarily straightforward when a side hustle is taxable and when it's not. There's quite a few different rules and exceptions to rules because tax can never just be easy. I think the thing to look at is that, and there was a lot of misinformation about this a little while ago on social media about HMRC coming after the side hustle, and a lot of even accountants were saying that there's new rules, but there weren't any new rules. It's just the way HMRC get their information. So a side hustle is a side hustle primarily if you're doing it to make money. So that's buying something to resell or improving something. And HMRC look at things like how often you're doing it. So you're not going to get done by HMRC for selling your old clothes or something like that, because you never bought those clothes originally to sell on. But if you bought, say, I don't know, like a baseball card, once it's a growing value and then sold it, then you're looking more likely like it's going to be a side hustle.
That sounds random, but that is actually my side hustle. So that's why the baseball card came up. So 2 out of 3 of us have a side hustle here. So yeah, very interesting. I didn't go into the side hustle realizing, or well, not even necessarily realizing, but thinking about the tax implications of it. So I do think it's an important topic to cover off.
Yeah, 100%. I think also, I mean, you mentioned about people selling clothes. I know there's been a lot of coverage recently about people selling things on eBay and Depop and how you treat the tax implications on those sales. So I think that would probably also be healthy to cover off today, because I know myself included and a few of my friends umming and ahhing as to what that means for us as we make our millions reselling our clothes.
If only.
Yeah. So yeah, let's talk around that a little bit.
So yeah, like I said a minute ago, there was so much misinformation, even going into the beginning of this year, and because people were calling this side hustle tax. It wasn't. All that changed was HMRC now get information from sites like eBay, but they're not, like I said, they're not going after people selling their old clothes. They're going after the people that are intentionally buying something, selling it on eBay to make a profit. And I think because of the misinformation, there has actually been quite a lot of people probably over-reporting their income, to be completely honest with you. In fact, when this new change came in, HMRC were expecting it was going to bring in, I think, something like 300 million of extra tax revenue, and the actual amount they received was 5 times higher than that at 1.5 billion.
Wow.
I actually think that's mainly a lot of that. I'm not saying that none of that is taxable, but I think a large portion of it is people panicking and being and over declaring their income because they'd rather not fall under HMRC's crosshairs.
Yeah, I've got a couple of mates that have done that for sure, where they haven't sought advice effectively, and they've tried to do it themselves because they kind of panic and they go, well, I want to make sure that I'm paying the right tax and all that kind of stuff. So yeah, definitely agree.
So I guess on that, couple of things to cover off. So you mentioned about disclosing income. So the standard way people would disclose is through self-assessment. So I assume when you're filling out and completing your self-assessment, you would put that as another income stream when completing. I mean, the flip side of the coin is for the people that have over disclosed their income and over-egged it. What can they do? Can they draw any of that back? Do they need to do a refiling?
So I think the first port of call for anyone is to speak to someone, an accountant or someone who does this sort of stuff themselves, because while I said that a lot of it potentially isn't taxable, you don't know it unless you ask the question. So I think that's the starting point. If you does turn out you've over declared your income, there are methods for getting it back, and it does depend on how long you've been over declaring it. But given this sort of side hustle tax thing only came out really last year, you probably could just log back onto your self-assessment and file a new one.
Yeah.
Not saying that won't sort of you won't see HMRC asking questions, because if you've declared that you've made a grand profit, paid the tax on it, and then suddenly you didn't make that grand profit, HMRC might ask.
Yeah.
But if you're confident that you weren't trading, you can make that to get it back.
Yeah, and I think, to be honest, for the sake of a couple £100, you could end up actually saving yourself a lot more.
Yeah.
So yeah, it's definitely a mindset to think about it. We've talked about it on a previous podcast about valuing your time, and I think that's another aspect as well that you've got to consider.
Yeah, so I guess on that, for those of us that don't necessarily memorise the tax bandings and what they mean to us, that light bedtime reading.
Working for an accountancy firm, we do.
Yeah, obviously.
Yeah, especially you two.
Yeah.
But I guess on that, what does the tax implications look like? So tell me, what parameters would we have to hit versus what tax bandings?
So most people pay tax of 20% on the bulk of their income. So you sort of, the bandings are, you get 12.5 grand, well, just over that as a personal allowance, which is tax free, and then the next 37 odd thousand is at 20%, the next 80 odd thousand is at 40%, and then you go into 45% on everything else. You may have national insurance to pay and all of that. That's dealt with separately to the tax. If you are trading, you do have some further allowances. So if your turnover is under £1,000, you can claim the trading allowance, which essentially will reduce your profits to nil. You can still claim trading allowance if it's over £1,000, but you need to have a look at what your expenses are. If your expenses are over £1,000, you're better off claiming your expenses. But if they're less than £1,000, you're better off claiming the trading allowance typically.
And when you say about trading allowance, is that a tick box on your self-assessment?
Pretty much, yeah. You do just tick a box and say that you're not claiming expenses, but you're claiming the £1,000 trading allowance. That is across all of your trades. So if you, I don't know, if we take, say, your example of the baseball cards, if you decided that, like Sophie, you're going to breed dogs, you'd only get 1,000 across the two. It's not per sole trade.
Yeah.
But equally, if you aren't, especially early days, you've got a lot of expenses at the beginning to set up these sorts of things. You're probably going to have more expenses than you are profits. At which point you don't really want to claim trading allowance, because that is limited to your profits. Whereas expenses, you can realise a loss that you can then carry forward.
Yeah, I think the interesting thing, certainly when I first started thinking about the tax side of it, was, am I trading or is it chattel? At the end of the day, is it a hobby? And I think there's definitely parts that I think probably are trading. So, but then I think a lot of it, I've had the cards for 10 plus years. So I've not bought them with the intention of selling them. It's just, that's just part of what I needed the cash and wanted to do it for other things. So where's that line?
So I will admit it's grey. It's not, you're not necessarily, just because you bought something with the intention of selling it at a profit doesn't necessarily mean you're taxing, but it is an indicator. HMRC look at a variety of things, sort of things like, did you make any changes to something before you sold it? Like, I know baseball cards are a bit different, but if you, bought a plain t-shirt, put a logo on it, sold it on, then it looks more like a trade. How often you do it, how long you hold the item between sort of purchase and sale. There's a whole wide variety of factors, and I think if you're doing anything beyond sort of selling old clothes or something like that, would definitely say it's worth speaking to someone. Doesn't necessarily mean you'll have tax to pay, but it is very much based on individual circumstances. So while I can't necessarily say you do this, this, and this, it's taxable, it's a bit more vague than that, unfortunately.
So
I think, sorry, I think that makes it difficult for a lot of people, because when you've got legislation out there and it's something as serious or deemed to be as serious as tax, when you're kind of battling the grey and you don't know if you sit in column A or column B, it is confusing for the everyday
Oh,
person.
100%. It's confusing for the people who are doing it every day.
Yeah.
It's so it is very much finger in the wind.
Yeah.
But I mean, broadly, especially on the side hustle side of things, you know what you're doing. Like the person selling the stuff knows what they're doing. Like they know whether
what their intentions
yeah,
are. Yeah.
like you, for example, if you were collecting those baseball cards like 10 years ago, found them in your loft and are selling them on now,
Yeah.
it's not taxable because
No.
you didn't buy them. You bought
yeah.
them. Like, I remember like things like match attacks when I was
Yeah,
younger
yeah.
being massively important.
Yeah.
That are worth anything now.
Yeah, yeah.
But
What about people that potentially look to purchase furniture and kind of do this upsell and do them up and stuff like that? You know, you could be buying bits of furniture for 200 quid and selling it on for 600 with a lick of paint on it. How would you treat that?
so if you're, I think that's likely to fall under the trade, because like I said earlier with the t-shirt example, you bought something with the intention of doing it up to then sell.
Yeah.
Dependent on sort of the frequency, if you do it, say, one piece of furniture once a year, sort of on your Christmas break, potentially won't be trading because you're not doing it very often. But you may still have tax to pay on that point because of capital gains tax. So dependent on the amount of money involved, if the capital gains tax, if you bought it for less than 6,000, sold it for less than 6,000, you don't have any tax to pay.
Right.
And you do also have a £3,000 allowance. But if you're doing sort of, I know antique furniture can go for a hell of a lot more than that.
Yeah.
So
yeah.
it does depend on the situation still. But if you're doing it infrequently, you probably don't have an issue. It's if that becomes a replacement, say, for your job, then you definitely will be trading at that point because
Yeah.
it's supporting your
It's
life.
supporting your life, yeah.
It's not a hobby. It's you're definitely trading at that point.
So basically, the overarching theme here is if you don't know which column you sit in, just give someone a call.
Yeah.
Yeah, hopefully they will. But yeah, it's not like most of the tax. It's not particularly straightforward, and it's definitely something to ask the question if you are not sure. And hopefully, like you can. There's a forgotten what they're called, but like a memory thing. It's called frog spawn, which stands for all of the factors HMRC look at, and it's like frequency, trading sort of trading arrangements, length of time, and so there is a set of factors, but it is very much a weighing up each part of it and then trying to come to a general conclusion as to whether it's trading or not.
Right, we've touched on this a little bit, but to draw it back, we know tax can be quite confusing. So, what are the common mistakes that you tend to find that side hustlers make?
I think the biggest one, and it's not necessarily a side hustler, but it's more when you actually got a business established, is client entertaining. And most people thinking that that is quite clearly a business expense, clearly deductible, but actually it's not. That is disallowed for tax purposes, which is, I would argue, a bit backwards, but here we are.
Yeah.
No one knows what's going through HMRC's head when they write these sorts of rules. So client entertainment isn't, but staff is.
Yeah.
So you can put on a lunch for your staff, and that is business deductible. But if you take a client out for lunch, it's not. And that is something you get a lot of pushback when telling clients this because, I mean, who doesn't love going out for lunch? And if you can pass it off as a business expense, all the better. But yeah, that's the big one. You do get some stranger things of people pushing the boundaries of what can be allowed. But then a lot of small businesses and side hustles, you won't necessarily have a separate business account. So the lines between what is for the business and what is for you personally can get a bit blurry.
Yeah.
Especially when you send me your bank statements to do your tax, and I'm like, are you trying to tell me that this is a business expense?
Yeah. Yeah.
So I guess just on that then, what is classed as an expense? What can you expense?
So there's sort of two rules. The firstly is it has to be wholly and exclusively for the benefit of the trade. So you can't have sort of anything that sort of like it's not it's for the trade, but it's not wholly and exclusively for the trade. So you've got a bit of personal use out of it. And that brings me on to the other rule, which is there can't be a duality of purpose. So another big thing that people often ask me is clothing. I need a new suit or a piece of like work boots or something like that. And it's there's a rule called duality of purpose. So if you have two uses for something, you can't necessarily claim it. So, and the reason why I'm referencing a suit is because it's gone through court cases before where someone's been like, well, I only wear this to client meetings. It's clearly for my business. But unfortunately, because I mean, HMRC made the argument that it's also keeping you warm and probably stopping you getting arrested because you can't go out wearing nothing. So,
Okay, yeah.
so they disallowed it. So there are sort of, it's not necessarily always clear cut. Something like a piece of software you use for your business, that's generally you can claim relief.
Okay. So what I'm thinking, I mean, we were talking about using tech, for example, like Zero, those kind of products to help monitor the trade.
Well,
Deductible.
deductible.
Yeah.
So yeah, something like Zero, or I'm sure there's loads of software out there now.
Yeah.
We're moving very much into the digital age for this sort of stuff. Gone are the days where you have to send in a box full of your receipts to your accountant. But things like that, something, because you're keeping track of your business, you need
Yeah.
to know whether you're turning a profit, loss, because you need to make business decisions. That's allowable.
Yeah.
It's clearly for the business. If you were getting some personal use out of it, so I know things like ChatGPT, you can pay for a subscription, it can do stuff for you, like write an email or
Yeah.
invoice or something for a client. Then, but you might also use it personally for, I don't know, if you need a recipe to make a lasagna. You have to start to think, is it anything significant?
Yeah.
Do I need to only allow part of that expense? So
Yeah.
I use ChatGPT 50% for business, but I also use it probably about 50% of the time for my own personal use. At which point you're only really going to be allowed to allow half of that expense. So
Okay.
And you have to proportion that yourself.
you have to proportion it yourself. It's there's obviously you don't necessarily have to track how many minutes you spent doing what, but it needs to be relatively accurate, because if you said you never use it for personal use, but actually if HMRC asks the question you couldn't prove it, and
Yeah.
you've sort of been like 99% of it is business use, but realistically it's 50-50. And a common one is cars in that regard, where if you buy a car for your business, that's completely fine, but if you've got private mileage, you can't claim all of the expense. So
What I'm getting from this is that there's a lot of area and a lot of space to self-assess incorrectly. And I think because there seems to be a lot of grey, I can understand why Luke mentioned about his mates, over assessing on their income and things like that. I think a lot of people, there's a fear factor where what they don't know, they don't know. They don't want to get it wrong because they don't want to incur penalties in the future. But I would say that there's so much area for error here that, as someone who's just trying to produce a standard self-assessment, how do we mitigate that apart from engaging an accountant?
yeah, well, I mean, most people don't want to get it wrong. Like, no, obviously there are people that try to push the boundaries and put stuff through that they shouldn't.
Yeah.
But the vast majority of people just want to get it right because they don't want HMRC breathing down their necks.
Yeah.
I think the important thing is to know what you don't know.
Yeah.
You need to know when you need specialist help, especially with things like self-assessment. If it's a side hustle, you know whether it's a business expense. And it's probably better to err on the side of caution, but then I'm quite a risk-averse person.
Okay, all right, let's make this simple. For someone that's got a side hustle, what are 3 quick questions they can ask themselves to see, is there any tax applicable?
Okay, I'd say first one is, why am I doing it? Is it clearing out old clothes, or is it because I'm trying to make some money out of this? Second one is, how often am I doing it? Is it chucking something on eBay once a month, or is it every day? It's taking up a few hours of my time. And then number 3 is, how much money am I making out of it? Is it is it a couple of £100 that's going to fall under the trading allowance, or is it sort of 5 to 10 grand where actually there is going to be some tax to pay?
Cool. So I think that's a good starting point for people who have developed a side hustle. These are the 3 questions I ask myself. Do I need more advice? Perfect, thanks.
So let's say we've asked ourselves those 3 questions. We've realised, oh, we might have a liability to pay. What other options? What should we do?
So the first point, cool, is sort of working out. So you've heard these 3 questions now, but you could have been doing this for a few years. So we need to work out when you started trading. When did you start actually making some money?
Mhm.
Then you've got 2 options. The first one, if you've only just started, you need to write to HMRC before 5th of October following the end of the tax year. So if you started your side hustle in January 2025, you've got till 5th of October 2025 to write to HMRC to register for self-assessment.
Okay.
And then you have to file your self-assessment tax return by 31st January 2026. If it's been going on for a number of years, you still need to do that, but we also need to look at the previous years, and you may need to make a disclosure to HMRC if you've been trading in those earlier years. That is quite a complicated area, and I'd definitely say if you are aware it's been going on for a while and you need to come forward to HMRC, it's worth speaking to an accountant at that point, because they will know how to communicate with HMRC and how to make sure you're minimizing the HMRC almost backlash from it, because they will charge penalties and interest, and having someone fighting your corner, knowing the tax rules, knowing the background and why it's all happening, can make sure that you're sort of limiting any additional costs that you could incur, because HMRC are going to want to take as much back as they can.
I think the important point to note as well is the accountants are insured to provide this advice.
Yeah.
So, you've got that extra coverage there. So don't think of it like it's just a cost. There's actually a lot of peace of mind there to know as well.
Yeah, and it allows you to focus on your actual business.
Yeah.
Like you don't want to spend, someone who does accounts every day can probably knock them out in a quarter of the time it'll take you with no background, and they're more likely to be right.
Yeah.
I think, for us guys that are exposed to this daily, a self-assessment doesn't seem super daunting. You mentioned about the disclosures of backdating if you haven't disclosed any income in previous years. Is it a given that the individual is always going to receive a penalty? Do HMRC look at the severity of what you haven't disclosed? How's that tend to be?
So yeah, they look at the severity, how long it's been going on for, and your sort of reasoning behind why you didn't report it. So unfortunately, HMRC don't generally take the view, oh, I didn't know it was reportable. But in coming forward without HMRC prompting you, you're more likely to lower penalties. So for a careless error, the penalties can sometimes be nil. But if you HMRC quite recently have started taking the stance that if it's gone on for over 3 years, it's no longer a careless error, and then the minimum penalty they're charged is 15% of the uncollected tax.
Right.
So, but speaking to someone who knows these rules and knows what HMRC are looking for, is definitely worth at least having that chat.
Yeah.
I think the other thing to bear in mind, and a question I get asked a lot when I'm dealing with these disclosures, especially when HMRC have asked a client about the a current year, sort of their tax return missing some income, is okay. They've asked about, let's say, 2023. I've been doing this for a few years, so I need to tell them about 22 and 21.
Yeah.
And the answer is, I mean, ethically as a tax advisor, I have to say it's yes. But the other thing you've got to bear in mind is if HMRC know you were doing it this year, the next port of call is going to be, well, we got some tax out of them this year. Let's have a look at last year.
Yeah.
And then because you haven't came forward and told them that from the beginning, they're going to be probably looking to charge higher penalties, because it's now looking like you're deliberately not telling them about your income to try to limit your tax.
Yeah.
But I think on the income side of things, and obviously disclosing, I've seen it a couple of times now where I've had meetings with new clients and they've come on board and they've said, oh, I need to do a tax return this year because I'm above a threshold or whatever. We then delve a little bit deeper to get a better understanding of them and potentially a side hustle. And for us, we would qualify that you do need to disclose that side hustle. But then they turn around and go, well, my previous accountant said that I didn't need to disclose the side hustle. I think one of the things that we come up against is because this area is so grey and it's not a black and white kind of this means yes, this means no, it can allow a lot of people to get the wrong advice. And I think when HMRC then look at that individual, at the end of the day, you're responsible for your own self-assessment. And that, I think, can be quite scaremongering for a lot of individuals and a bit overwhelming, to be honest.
Yeah, and on that, like, yes, you are responsible, but if you've got professional advice, as Luke mentioned earlier, they're covered by insurance, so it's not going to cover the tax, but it will cover the cost in correcting it. The other thing to bear in mind is that if you've gone to someone for advice, you're not being careless. And if it's not a careless error, HMRC won't charge you penalties because you've relied on a qualified individual to give advice. Contrary to that, if you know or you suspect the advice is wrong, get a second opinion, because while it's all well and good sort of having that, it's not going to save you the stress if HMRC come knocking. And while they won't necessarily charge penalties, you still have to pay the tax and there'll be interest, because HMRC will never waive those two things, even if you've got professional advice. So while you get out the penalties, you won't get out the rest of it. So if you're not happy with the advice or something doesn't sound right to you, speak to someone, just get a second opinion. There's nothing wrong with that. And even in the tax world, we all sort of tax advisors talk to each other because no one's an expert in everything. And just because an accountant does a set of accounts doesn't mean they're an expert in the tax. So having the other experienced people weighing in and giving an opinion, and whether that's at a different practice or you're talking to multiple accountants or tax advisors, having multiple opinions is always better. And if they both say there's no issue, there's probably no issue. But if you're getting contrary opinions, you need to then make a decision or even get a third opinion at that point. But you need to, you can't just bury your head in the sand, essentially.
Yeah, I think that's an important point, because I'm just thinking through the sort, there might not necessarily, the people that are having the side hustles, and there might be some people listening that have got side hustles, but they aren't used to being exposed to tax, because as an employee, your tax is dealt with by your company. You don't need, you kind of go, well, I'm just assuming I'm paying the right tax. And, there might be some kind of thought of, well, actually, I just don't know what to do. I'm totally
and the other thing to bear in mind is that if you speak to an accountant, they tell you, oh no, you've got no tax to pay, that's the answer you want to hear. So you're not necessarily going to go for a second opinion, but if it doesn't sound right, or you've just got a feeling, it's just worth asking someone, because then you can be sure. You don't need, no one wants HMRC breathing down their necks. And we do see HMRC unfortunately going after smaller taxpayers, because yes, we all hear about big corporations avoiding paying loads of tax, but they have tax advisors, lawyers and stuff. They have the resources to fight it, even if HMRC come after them. Smaller businesses don't.
No, exactly. It ends up costing HMRC more, I guess, to do it. Yeah.
Perfect. Obviously, we deal with a variety of clients. We've seen multiple examples of different side hustles every day. I'm going to give you some examples and you're going to let me know, does this fit under side hustle or is this a business? Okay.
Okay.
Right. Someone who makes just an extra 500 quid a year on Depop selling clothes.
Probably not a side hustle. If they're, like I said earlier, if they're making changes to clothes, might be side hustle. But if you're just selling your old wardrobe, not side hustle.
Okay. A freelancer earning 10k a year alongside their full-time job.
Probably a side hustle. There's quite a lot of money, so there's probably a lot of time. It's not a sort of one-off quick thing. It's going to be a side hustle.
Okay. A landlord renting out a spare room occasionally.
Well, that's an interesting one. I would say potentially a side hustle, but there is reliefs for the spare room, but we'll go into that at a different point.
So we're drawing to a close here, running out of time. But Regan, if you could give us a quick synopsis for those, so three 3 bullet points to check that people can just check whether they should be talking to someone or they could potentially have a side hustle.
Okay, so I'd say, firstly, why am I doing it? What am I doing? And how much am I making out of it?
Okay.
I'd say make sure you're keeping records of your income and expenses, whether that's on a spreadsheet or using a software like Zero. And if you're not sure, ask the question, because it's better to ask the question now than have a problem in the future.
Perfect. And what's the biggest mistake you'd warn people to avoid?
Not getting advice when you need it. Don't know what you don't know. Don't sort of try to blag it. If you don't know something, just ask the question.
Ask your accountant, people. Heard it here first.
So if today's episode's got you thinking about whether you've got your side hustle and taxes related to it, don't ignore it. Planning is key with these kind of things, and it could just be a sense check, a soundboard, speak to someone. It's worth getting the right advice for it.
Yeah, and absolutely. I mean, the team at AdVal are always on hand to help. I think, most importantly, stay compliant, don't avoid the tax, but more importantly, don't overpay it.
Don't overpay.
Agreed.
Yeah, somehow.
Agreed. Regan, thanks so much for your time.
Cheers,
yeah, no problem at all. That's it for this episode. Let's figure it out. We'll see you next time for more finance insights with a bit of personality.
Cheers.
Cheers.
Cheers.